Hey everyone, I'm Mr. Roboto. So I want to do things a little bit differently today. The main thing I want to talk about is a reflection on my trading day today, and the topic being losing your emotional edge and then having the discipline to walk away for the day. So this is something that I have learned and cultivated throughout my trading career, and it's knowing when your state of mind is no longer optimal for you to continue trading for the day. Oftentimes, this is when I take a loss, and then I have these strong emotions to revenge trade, um, and it's just being able to recognize that emotion. Having experienced it in the past numerous times, but it's being able to recognize that and to realize that whatever trade you take from that point forward, you will be at a disadvantage from your optimal trading state. And whenever you're at a disadvantage, whenever your edge is no longer there, um, you're prone to making mistakes. You're prone to taking losses. You're, I know I have in the past been prone to sizing up ridiculously, taking trades that are riskier, and holding losing positions longer, not scaling out winning positions, um, all of those things I become prone to whenever I lose my emotional edge for the day. Um, so whenever I have that, whenever I know that I am no longer there mentally and I'm taking riskier and riskier trades, I walk away. And this is a very important part about uh, being a consistent and disciplined trader. So I think it's very important to talk about it. Go ahead and take a quick look at how my morning went. So one of the first trades I took was on Affirm. I liked how Affirm looked very bullish in the morning. It was starting to, it had this move in the after hours, and then it looks like it was trending up for the day. The context of the market was that very few tech stocks in the morning were looking bullish at all. I think a lot of them were actually dropping. So when I saw this action on Affirm, I was considering taking Affirm long for the morning, which I did end up doing, but I was not in this position too long. The plan from the start was always to scalp it. So Affirm had this dip in the morning. I took a very small position here. And then on this 2-minute wick, I sold my position right around here. It was about an 8% win, very small win, but I was happy to start the day with some green. Next was Cat. So I tweeted this last night. Caterpillar was broke down from this yearly bottom trend line that it was holding. It broke down, and then it rallied back up in the past week. And then, so my thesis was that it would potentially reject this bottom trend line, and then goes up and then comes back down. So that was my thesis, and so I took this trade, and I'm actually swinging this trade. The plan for this trade was always to swing it. So I took some positions right around here. I went ahead and took some puts, and I added to my position right here on this pop. I didn't get the best entries. It was more like right around here is when I added to this pop. So I'm currently green on this trade. I was considering scaling out right here, taking some profit. This did worry me a little bit, but Caterpillar did end up dying a little bit at the end of the day. So I'm fairly confident holding this position. So we'll see what happens. My price target for this is I want to see if it can do a double bottom right around this range. If you can get down to this range in the next couple of days or next week, this would be a really good win on my swing account. And then Tesla, which I normally trade pretty well, was actually the thing that put me on tilt this morning. So I had this 30-minute supply zone. You can see it here. Looks like I have to put after hours on. So I had a 30-minute supply zone on Tesla. You can see this green basing candle, and then it's sold off from here previously. So I took the open in this green basing candle, and I formed my 30-minute supply. Well, as you can see, Tesla just absolutely ripped up in the morning, and it blew through my supply zone. So when I saw this, I wanted to get into Tesla long. The problem with this morning was, I didn't have too much of I didn't have too much of a thesis on the market. I thought the market could it could go up, it could go down. It was like almost 50-50 to me. So I didn't have a strong opinion on which way the market was going. And that proved to be right, because the market, if you go to QQQ just pretty much chopped around all day. It never really made too strong of a move on the upside. You could argue that the move on the downside was stronger, but there's still a lot of chop here. And especially with this recovery later on in the day, there's just a lot of chop. So it was already mistake number one. I came into the day with not really having a strong thesis. And then so when I saw this, I went ahead and bought some Tesla calls right around here, and I didn't scale out. There was a target. I could have used this as a prior target, this yesterday's high of day, but I didn't scale. And I actually added to my position on this knife. Added to my position, and then right around here, I took a couple scales. I scaled out about 20% of my position right here, but then I got caught up in this knife. Ended up, and the premiums on Tesla just absolutely got destroyed this morning, because I think we were following what QQQ was doing. QQQ at this time just absolutely died. And then when that happened, the premiums on Tesla calls just, went down drastically. I ended up having to cut my position. I was in a little bit of a state of shock right around here. I was in a state of shock, seeing how fast the premiums had dropped and seeing how fast Tesla was knifing. I did end up getting out of my position right around here. So I took an L. What was a green trade, a pretty nice green trade, ended up taking my profits from a firm this morning. Took all of it with it, and I was down about $1,000 on the day, right around here. So right at this point, having been up green on the day, I probably would have been a nice base hit type of day. My green streak would have continued, but then now I'm down $1,000. So the emotions that I'm undergoing at this point are pretty strong. I had a lot of urge to do some revenge trading. I wanted to, I was thinking of potentially just right here going short, buying puts on Tesla, and going like 3x my normal size. Hindsight, that would have been a great trade, and I probably wouldn't be making this video right now had I done this. But the thing is, that would have been a very reactive trade. I wouldn't have put in too much thought into planning out this trade, and it would have been 100% a revenge trade if I would have taken this trade right here and bought some puts where I ended up selling my calls for a loss. And the problem with that is I'm buying pretty late into this move. Again, hindsight's 2020. This move continued, but had I bought right here, there's this potential for this pre-market support, right? So Tesla could have easily bounced going this way, and then seeing as how choppy today was, this is not too, it's not too unrealistic for this to have happened. Tesla bouncing and going up, and then I would have been underwater on a pretty heavy position, and then my $1,000 losing day, which is manageable for my account, would have been, at this point, I'd probably be down $3,000, $4,000, $5,000. And And then it just snowballs from there. The revenge trading urge and tendency just grows even larger. All of a sudden you're trading even more size. All of a sudden you're taking riskier trades. This is a potential support. Again, this 30-minute supply got blown. It got blown through, and then on the way back down, it could have turned into a demand. And with this pre-market resistance here, this could have turned into support. This would have been a poor trade to take. If I would have just stepped back, if I would have stepped back and analyzed this, I would almost never take this trade. But I have the discipline to recognize when my emotions are out of whack and when my edge is no longer there. I still have my technical edge, but my emotional edge is gone. It's totally gone for the day. I'm having these urges to revenge trade. I'm not analyzing things as I should, and I'm rushing into potential positions. So when I took this L, I took a step back and I actually said I was done for today. I didn't like how the market was moving. I didn't like the chop that we were experiencing. Look at this chop on the Qs, right? There's a lot of chop here. This looks bullish, really bullish 1 second, and then it looks super bearish, and then bullish again, and then super bearish, bullish, and then boom, super bearish. It's a lot of chop, So the way I trade, I have very little edge here. Having already been burned on the day, I've now lost even more of my edge, and it's just not a good time to trade. So what did I end up doing? I actually hopped off the computer. I got some sunshine. I hopped into my car. Drove around, listened to some podcasts. Got some desserts at the local bakery, and just enjoyed my day. Took my mind off of the market. At the end of the day, big picture, everything's great. Very sizable loss today. I'm only this would be my third red day for September, so everything's great. And I actually think it's a win when you're able to take a step back and avoid trading when your edge isn't there. And that's something that I think it's a huge win. It's a win in the discipline column. It's a win in your consistency column, and your account is going to grow. It's going to do great things for your account when you're able to take a step back and recognize these different emotions and do the right thing and not trade when you're under distress and emotional and you're very prone to emotional trading. So that's it for me. Hop off the soapbox. Tomorrow's another day. Very clear-headed. I'm very excited for what happens tomorrow. I'm excited to trade. But again, this is just one part of being a consistent trader. I hope some of you guys take something away from it. And I'll see you guys next time.